What's up everybody? Today I'm making a video on why so many traders blow their funded accounts once they become funded. This is for the prop firm space. If you do not trade prop firms, either through futures or Forex, then this may not be as relevant, but it still could be interesting, so it's still probably worth a watch. If you are a funded trader and you keep on getting funded, blowing an account, or you cannot get funded, then this is going to be critical because I think it will change the way you approach your funded journey, which hopefully will improve your return. Before I jump in, I do want to mention that I was recently very fortunate enough to be on an awesome podcast hosted by Justin Flynn or Laserwolf. The link is in the description down below. I share a lot in there on how to improve your performance, and there's also a discount code in that podcast that you can use if you want to work with me and have me as your performance coach. It's a really cool program that I've put on that will have weekly calls and essentially help you become a successful trader. Definitely check it out. Let's jump into this. Why so many traders blow their account. It's going to be quite an interesting one. And for me, it all starts on how do the traders get funded? And there's three approaches, three different attitudes to getting funded, which are critical when you are funded. The first is when you YOLO an account, when you just go straight in with max contracts and hopefully hit a profit target to get funded. I'm going to say that this one, if you do not have a proven track record, is completely pointless, because then you just have a funded account. Congratulations, you're going to pay the 200, 250, 180, whatever it is, the fee to get that funded account, and you don't have the skills to actually make any money. So you might as well just YOLO it again. Second one is the traders who keep on trying. They keep failing an account, they buy a new one, they fail another eval, they buy a new one, and they keep on doing this. And the issue here is, again, you probably don't have the skills to actually make money. You can see a bit of a theme. And then finally, trading as normal. I feel that even if you pass an eval account when you're trading as normal, you feel that pressure, right? It feels like a bit of a journey. You're making small gains, small gains, small gains. This is what the prop firms really encourage you to do. The problem is, it then means that when you do get funded, it's a huge amount of pressure, because it might have taken you 2 weeks, 3 weeks, 4 weeks to get that funded account. Now it's like if you blow it, it's a big step back, which you're going to jump into a little bit more. But the main thing here is the focus often becomes, I'm trying to get funded. My goal is to hit this funded account, and then I have these funds and I can go and make real money with it. But that means that you've got a very short-term goal, and the focus is, I just need to make the X amount of money, rather than I need to actually become a good trader. Getting funded does not mean you're a profitable trader. You can trade with a YOLO approach and get funded. It's easy to get funded. You could simply have two accounts, take max contracts, go long in one, short in the other, and as long as you're not in a super choppy market where it goes up in your favor in one, blows one, then comes back down, the likelihood is you will get funded. It's not difficult to get funded. It does not mean you are a profitable trader. Now, the attitude when funded is also pretty critical, because for a lot of traders, it's like, you reached your goal, you became funded, now what? And sometimes that kind of situation where you hit your goal, you get that, oh, I don't know what to do. It can be a little bit scary. Oh, I didn't think I'd get this far. A lot of goals we don't achieve. So when you achieve it, it can be scary. There's the added pressure, because failing now costs you more. This increases your emotions. If you were scared about failing an eval account and costing an extra 20, 30, 40 bucks to get a new one, it's not that big of a deal. But if you just put down a $200 payment and you blow that account, it maybe hurts a little bit. Not everyone, but 200 bucks is a little bit more of a financial commitment. If you blow that account, quite often it can feel like a huge step back, and especially if you've been trading as normal and it's taken you a month to get the account funded. Maybe you've been trying for months and months and you finally get this one. If you lose this account, you feel like you're going right back to the beginning. Quite often traders begin to say they're going to trade properly now, and it's like, okay, so what you did to get funded, or what you've been doing outside of getting funded, isn't how you normally trade, and now you're going to completely change your approach to something that you probably don't have any success with to try to make money. It makes no sense. And often traders begin to have that fixed goal of trying to get to payout. I've seen so many people who have said in videos, oh, I got halfway to getting that cash out, halfway, and it's like, that doesn't mean anything. Like, getting to that first cash out means nothing for your long-term success as a trader. It feels good, but again, it doesn't mean anything. And when you have that as a fixed goal, well, guess what? If you get 2/3 of the way there, that pressure to just make that final bit, it adds up and it makes you more likely to make mistakes. So yeah, why does all of this make it more likely that traders blow their accounts? And the big one here is a lot of traders get funded before they are a profitable trader. There was a recent number that came out from Apex Trading that said that between 40 and 50% of traders have got funded. Now, I'm assuming that that means that between 40 and 50% of traders who have taken any account have at some point got funded, whether it's taken them 1 attempt or 50 attempts, they've got funded at some point. The reality is that really only 5%, maybe even less than that, of people consistently make money in the market. Maybe it's 10%, but between 5 and 10%, which means that the vast majority of people who are getting funded are not profitable traders. Think of it like this: if it took you 10 attempts to get funded, then you probably only have a 10% chance of reaching that first payout goal. There's a 1 in 10 chance that you're going to hit that. And you could say, well, maybe you've improved and maybe you have, but when you have added emotions, the likelihood is your performance isn't going to improve when you get funded. You're essentially kind of setting yourself up for failure from the get-go. A big thing as well is that traders see blowing their accounts as a massive failure, and this really ramps up the emotion. If you've taken, let's say that you've got a trailing drawdown and you have a day where you are at some point up $1,000 and then you had to take a couple of bad trades, you're back to break even, all of a sudden that fear of, oh my god, I've only got 1,500 or 2,500, whatever it is, trailing drawdown left, it can really freak a trader out. It ramps up the emotion and makes it less likely that you're going to continue to trade well. And then finally, they're setting goals on the short term. First it was get funded, now it's reach profit goal. And this isn't the approach to become a great trader. All that does is put focus on the results in the short term, which increases your emotion. If your goal is simply to get to hit that profit goal, then what do you do after that? And a lot of traders, the focus becomes money, right? The focus becomes, how can I hit this monetary goal? And that isn't the way to become a successful trader. So what should traders do once funded or even before they get funded to make it more likely that they continue to trade well? This is what I suggest. It's the path that I take whenever I'm trying to get a new account. It works pretty well. Before you take an eval account, before you even buy that account, whatever it is, you need to prove that you're a profitable trader. The way you do this, and this is going to get so many people saying paper trading doesn't work. It doesn't work if you don't do it properly. But if you paper trade to try and hit a high accuracy and you go, I don't even care about the results, I'm going to take one contract or 1 or 2 contracts, however your strategy is. I'm not even going to look at the P&L until I've taken 20 trades, and every trade I'm going to grade as a 1 if I nailed my strategy or a 0 if I didn't. And the goal is very simply to hit a high accuracy. And I'm actually going to bring over this performance calculator to show you why. This is available on my site. I will put a link down below. This is just a way to give you an idea of how accurate you need to be successful. So let's say that you have a strategy that wins 50% of the time, gives you a 1 to 2 risk reward, and you on average get 2 trades per day. This would be a pretty good strategy, right? And if that risk is, say, 10 points on the NQ, then $200. Well, that should be pretty straightforward. Here's the issue: for you to make just 15R a month, which if you're risking around about $200 would actually be about the 50k account passed, you need to make 15R. The accuracy required to achieve that in 1 month is 89%. 89%. That means that only really 4 trades, maybe 5 trades out of your entire month can be mistakes. If you have 2 trades a day, 50% win percentage, and a risk reward of 1 to 2, if that's what your strategy gives. Now just think about that. Are you anywhere near the level that you can say I trade with a 90% accuracy? No, you're not. I'm sorry, this is the point where I'm just going to be honest, and I do this with my clients. I'm like, do we want to be nice or do we want to be honest? You're not at that level. The reason so few people make it is because so few people are at this level. Now, even if you have a better return rate in this, let's say you have a strategy that gives you a 60% win percentage and a 1 to 2 risk rewards, you still need a 74% accuracy to hit that target in 1 month. Even if you go to 70%, you still need to be 64% accurate to hit that in 1 month. And you might say 64% doesn't sound too difficult. Well, here's the thing. 64% means that 2 out of every 3 trades need to be spot on. The likelihood of that being where you are right now is pretty low, and that is why you keep failing these accounts. Okay, so I would highly encourage you to, if you keep on failing evals, if you get maybe 1 out of 5 passed, or you keep on blowing accounts, I would say stop spending money, use the sim account, and go, I'm going to trade until I have taken 20 trades, 40 trades, 50, whatever it is for you, where you're hitting this accuracy level. And until you've done that, there's no point in you even trying to get funded, because even when you get funded, you are not going to be a successful enough trader to actually make money. Now, you might say, okay, I take 20 trades, doesn't work, take another 20 trades. By the end of 1 month, I'm there. I've just wasted a month. I could have got funded by the end of that month if I had done it. This is what you then do. When you know you're a profitable trader, you know that your accuracy levels are really high, your strategy works. When you do an eval account, just YOLO it. And I say that, and people are going to, again, be like, what? Why would you just YOLO account? You said before, don't YOLO the account. The difference is, if you're a profitable trader, then you do not need to prove you're a profitable trader. If you know that your accuracy level is 85% on a strategy that returns, with those numbers, 30R, 20R, whatever it is, once you know that, yes, I am able to trade profitably, then you don't need to prove it on the eval account. Okay, you can simply take max contracts, try on a setup, like wait until you get a clear setup where your edge is at. If you have that 70% win percentage, 1 to 2 risk rewards, and you're trading something where you can take, say, 10 contracts, you give yourself a 70% chance of hitting your profit target. You have a 70% chance of getting funded on that one trade. That's a pretty good situation to be in. It takes away a lot of the emotion that gets built up from, it takes you 4 weeks to get funded. Like that puts a huge amount of pressure on you later on. If you simply go, hey, even if I blow this funded account, there's a 70% chance I can get funded again as long as I execute my edge really well on my next YOLO, then you're in a, it makes it a lot easier to then just trade normally on the account. And then a big thing is to try to adopt a growth mindset. You are not trying to just get funded. You are not trying to just get a payout. You're trying to become a long-term profitable trader. What this means is you should not be focusing your trading on day-to-day to hit those short-term goals. You need to be focusing on how can I improve on my trading. And this is where performance comes in. If you want to improve on performance, definitely check out the rest of my videos. Maybe look into working with me. Like I said, there's 25% discount on that podcast. I'll also put the discount code down below if you're interested in that. Essentially, you need to keep on making improvements. You need to not see today as a trading day where, hey, I'm gonna try to hit that profit goal. I'm only 1,500 away. Today could be the day. It should be a case of, today I'm going to focus on improving this one particular weakness that I have, so that if I can improve on it by a small amount today, a small amount tomorrow, and so on, in 3 weeks time, it's not going to be part of my trading, and it's going to make me a better trader for in the long run. And then the final thing is, you must use discounts. If you are YOLOing an account, if you use this process and you go, hey, you know what, I'm going to paper trade until I know I'm profitable, and then I'm just going to YOLO an account, I'm going to go max size, and I'm just going to be like, hey, even if it takes me 3 attempts, it's only going to cost me, $90 with discounts, then that's fine. If that is the case, you have to use the discounts. If you're taking this approach, there's maybe a 50%. If you have a 50% win percentage on that 1 to 2 risk reward, 50% chance just blow it on one trade, and that's fine. You have to take the approach of, hey, that's fine. That's what I signed up for. I can just get another account, maybe even buy 2 or 3 accounts at the start for as big of a discount as possible. Trade one, then trade the other, and the goal should be a case of, hey, you know what? There is a very high probability that one of these 3 is going to get funded, maybe even 2 of these 3, and if it's 3 out of 3, then it's an absolute bonus. Save yourself the money by using discount codes, and they're always available. Shop around. If the account that you have been with, they're not offering one, find another one. You have to just not really get married to one prop firm. I was with Bullnox for a while, and they aren't doing any discounts at the moment. So you know what? I moved over to Apex because I wanted to diversify where I've got funded funds, and because they're offering a better deal right now. And that's how you have to do it. Find those 80% deals, 70% deals. Use people's affiliate links if you can, because they will often have better deals as well than the stock deal. And yeah, so I hope you found this useful. It's, I think, a much better approach than what a lot of people are doing, which is they're just trying to get funded by trading their current approach that they have not made money with. And guess what? Even on the 10% chance, the 1 out of 10 accounts that they happen to get funded because they took a few really good trades, they got lucky on a few trades and the market's in a perfect spot, that account is going to get blown 9 times out of 10 anyway. There's no point doing it. So adopt this approach, focus on becoming a profitable trader first, and then get that funded account and make sure that when you are funded, you are a profitable trader so that you can then trade it to continue to make money.